Yeah. Depending on who I'm talking to, I do it as well. One of my favorite lines from any movie ever was a movie called About Last Night, million years old. Jim Belushi's in it. Demi Moore, Rob Lowe, whatever. And it's about single people in Chicago. And Rob Lowe is dating Demi Moore. They're just getting off in the relationship. And Demi Moore's friend's kind of a bitch, doesn't like losing her friend and all that stuff. And so they're always going out as this group of four. And the first time this friend meets Rob Lowe's friend, Jim Belushi, they're in a bar, and the friend asks Jim Belushi, "So what do you do?" He's like, "Do you know much about the fight game?" She says, "No, I'm the heavyweight champion of the world." Oh, it's so funny. I can't not remember that. You know much about the fight game? No. Oh, I'm the heavyweight champion of the world. What do you do for exercise? You know anything about CrossFit? No. Well, I do CrossFit. Oh my word, huh?
Yeah.
Yeah. You know, it's kind of sad. I don't know. Maybe it's sad. Maybe it's not. Writer's strike. Can we agree that Hollywood's not nearly as good as it used to be? True. Maybe they said that when we were kids and I don't know, Clark Gable was running around. But it's not as good, I don't think.
Do you know why?
Because these young kids won't get off my lawn.
No, they were bought out by the CCP.
Oh.
And they started running all of their stuff to appeal to that market, and it lost the American market. And they
okay. To appeal to China, right? They started because that's a big billion
it's a huge
market. I got you.
And if they don't make it past the censors, their movie doesn't. So they've really there's some interesting articles around that.
The underlying answer to that. Do we have time for this? No, we don't. Sorry. 8 o'clock. Let's go ahead and get started. It all comes back to money. Anyway, let's get yesterday. I hope it was awesome for y'all. I hope tomorrow's even better. But today's today. We're going to talk about today, which will have a big impact on tomorrow and forward for y'all. So Shana's here again. Numbers wizard. I'm going to allow recording for Heather's thing. Very nice. Thank you. Does your Siri on your phone ever just pop off on you sometimes and just like you'll be not asking it to do something? I'll say, please tell me again, where do you want or what do you want? Like, I don't want anything. Leave me alone. So anyway, so today, well, first of all, let's start out here. Anybody got any bookkeeping questions, accounting questions? Do you hear it? Okay. Good.
No.
Good. I met with my accountant yesterday. He made me a lot of money, or saved me a lot of money, I suppose, which is very good.
That's great.
And it was interesting because, Jeff, you meet with your accounting people on the regular, right?
Mm-hmm.
How regular is that?
Well, it depends. So
the week before taxes are due, and then almost every day?
No. We got all the kids are getting. So we put all the kids are working through the same accountant.
Through the same accountant.
As we are, yeah. So it's like a family thing now.
Yep. You kind of find what works and you go with it, right?
Mm-hmm.
So all the kids are. So, but do you go to them monthly, quarterly?
I would say at least monthly. More than that sometimes.
Why is it? What would cause you to go to them more than why? Well, let's start here. Why monthly?
New information, asking questions to find out how to help myself this year based on what income we see coming. Can we do this? Can we do that? Tax wise.
Okay. Go ahead.
You should have a relationship with your CPA, your tax advisor, and your accountant. They should know you personally and what's going on with your life to be able to advise you accordingly. So if you're not in communication or in relationship with your accountant, but you're trusting them with your money, that kind of feels like an oxymoron to me.
What'd you call me?
I'm sorry, John.
Yeah. So think about it for a minute, though. You should have a relationship with your accountant, right? But relationships you don't turn a switch. All right, I got a relationship. It doesn't go that way. It's a conversation, a dialogue, a back and forth, and it's probably over time, right? So I think you're right, Shana. They need to know what your hopes and dreams are and what your plan to get to those hopes and dreams are. And then their job is to help you, right? But if you don't have any hopes and dreams or any plans, it's really hard for them to help you.
Right.
Okay. So what you're going to want to do, and before I get in too deep here, let's know this, people. Your CPA, your accountant, is not your wealth advisor. These are two different roles. Your CPA is there to save you tax money. Your wealth advisor is to increase your wealth. And sometimes those are two different things. And neither of those are your attorney, whose job is to keep you out of jail or from getting sued or being able to protect yourself. Three different roles are occurring. All right. And Raymond James or Edward Jones or whomever might not be any of them. They're a good place to store some money in an ETF and set it and forget it, which has got its role too, right?
Yes.
You have that?
Yes.
Jeff, you have that, right? An ETF, just to set and forget it. We're going to put some money in a Raymond James, whatever, some Vanguard,
I
whatever.
have mine in E-Trade and Morgan Stanley.
Yeah,
I do.
right. Those type of places. Right.
I just have mine in Acorns.
Yeah. But you're not meeting with them and saying, oh, let's do something. No, that's a set it and forget it.
Yep.
But your accountant, you want to meet with and say, okay, probably lesser. Well, I guess January, February, March, you're getting ready for tax season. But by then it's already too late, right? Or let's just say that.
That's right.
So really January, February, and March, and correct me if I'm wrong on either of you, I'm just going to yap until you tell me to shut up. January, February, March really should be laying the foundation for the rest of the year on what you're going to buy or how you're going to hire or what you're going to expense and how you're going to do all that. Is that fair to say?
Yep. You should be wrapping up your budgeting process for what you're projecting for the year to look like.
And it's a budget. It's not you're not there with a chisel and a hammer. It's more of a, here's what I think is going to happen. Here's kind of what we're planning. Here's what we're hoping. Here's some of the things we're doing.
Correct.
And if that happens, what happens? Like yesterday, my guy told me, and I'm at we're just at the hand holding stage right now. Right. But we were talking about what we're going to do probably in the fall. Once we know, we have a good idea of what we've going to have, what we've collected already and what we're going to have. Some of the moves we can make, if we're going to do 1031s, if we're going to do cost segs, if we're going to, whatever, there's a menu of things we can do. But you really want to spend, at least from my perspective, and you guys tell me if you know anything different, I'm going to spend between January and probably August, September, trying to make as much money as I can. All right. Then I'm going to spend September through end of December mitigating my tax liability through investments and or hiring and or whatever. Does that sound like a reasonable way to go?
Yeah. I'd go back to the beginning. We interviewed like 3 CPAs or accountants before we found the one we liked. The one person just told us all the things we couldn't do.
Okay.
The second person was closer to retirement than being young enough to help me with tax laws. And the third one was somewhere in between all of them. And so we liked him. Right. And then you have to go through a couple dates, right? Here's my hopes. Here's my dreams. How are you? Yeah, blah, blah, blah. And then you figure out, yeah, I guess I do like this person. And yeah, they are competent. And yeah, I think they can help me. Right. And that's kind of where you're at with that. You ask a question. Go ahead.
I was going to say about CPAs is you have to be kind of careful because especially if you're trying to mitigate tax liability, there are aggressive CPAs and, like Jeff said, there's some that just say, no, no, no. And the thing about real estate, you have to get a CPA, and this is just my recommendation, who understands real estate. They understand that, you set up your business as a PLLC, kind of like what Shana was talking about last time, and your separate accounts versus your investments versus your business. That is a whole different thing. And as a business, you have certain expenses that you can deduct, and you want someone who is not afraid to do that and knows how to do that. And also, as a property owner, there's different things that you can be aggressive about, and you need to have an accountant that will support you on that and tell you how to set it up. And then, as what kind of tax deductions do you have? Like, how do you live your life, and how will they help you with that? Because if you have somebody who doesn't know how to separate all that out, like John was talking about, cost segregation with rental properties, some accountants don't want to spend the time on it, and you have to be prepared. Don't be looking for the cheapest person. Be looking for the person who fits your level of risk taking when it comes to tax deductions.
I had a conversation with my coach yesterday. I think you guys will find this interesting. We were talking about something different, but it's the same thing as well. He said to me, do you know what a drug agent or what a drug dealer realtor looks like? Drug dealer realtor. No. What? He says, okay. A drug dealer realtor is somebody who doesn't do what they're selling, right? There's no drug dealers that are junkies, right? They don't get high on their own supply, right? So you got all these realtors out there talking about how to do investing and this, that, and the other. And how you figure out if they're a drug dealer realtor is you ask them, do you own investment property? No. Yeah. Well, then what the hell are you telling me to do then, right? It's the same thing with your accountant. Do you have real estate investments? No. Well, what? Okay. They're a drug dealer realtor. And I'm not saying, or a drug dealer CPA. Keep looking. You want somebody who's a CPA doing what you're doing, or is doing what you hope to be doing. Does this make sense?
They have to at least understand,
I would go even further, because the way you understand is because you've done it. You've been burned.
Yes.
You're in it on the daily. Right.
And you might have to, it might take a couple of years of getting some tax returns done, because, if I have multiple returns, you don't just have an individual, you have them separate for businesses and that sort of thing. You have to be willing to pay for that, because they're going to save you a lot more than they're going to cost. It's just like a realtor. A realtor who's good at their job will save people money when they're selling and investing versus be a cost. And that's the value.
Yep. And we're a little off topic of what we're going to talk about. And Violet got mad at me the other day because we had a whole thing we're going to talk about. And we didn't, but that's the way it goes. Here's what I want you to think about. At least from my perspective, we sell real estate to earn enough income such that we can invest in stuff that's going to make us wealthy. Okay. So you want to keep your income low and your wealth high, because they're taxed at different rates. Okay. And to get wealthy, just like to create income, you need a team, right? If you're selling real estate, you need a title person, maybe you need an inspector, you need some interior design folks, you need contractors. That's your team for real estate. But if you're going to get wealthy, you need a numbers person. You need an accountant, you need a lawyer, you need your wealth people, you need mentors, you need a different type of team, but you need a team. And it's not one person. Okay. So I know most of the folks on this call are just still trying to earn income, but we got to get you thinking higher than that. You guys start thinking about, okay, I got my, right? Like Victoria's got, she's already got a couple houses on, Tennessee Avenue. She's starting to build up her monopoly, which is really super cool. But to fully access her capabilities, I don't know, Victoria, do you have an accountant that you're? Yeah, so that's your next step. Yep, that's your next step, because you're probably leaving. Are you doing cost segregations on your Rentals.
No.
Yeah, you
Mm-mm.
got to get an accountant. You're leaving probably, I don't know what your things are worth, but you're leaving thousands, if not tens of $1,000s in tax money on the table, which isn't,
Shana,
optimal.
I have a question.
What's your question?
Would you say that the number one, well, one of the top things is a realtor in order to save the most amount of money in taxes is number one, setting yourself up as a PLLC, but paying yourself a salary to save. Can you talk about, how much you save by paying yourself a salary versus paying taxes on your gross income?
I'm not sure on how much you actually save, but it's a tax benefit to pay yourself a salary. Yes, because when you set up the business, and I'm probably going in a different avenue than what you're thinking. When you set up the business, you can also set up an IRA. You can match that IRA. There are additional tax benefits and tax deductions that will, decrease your taxable income.
Well, you can also pay yourself a salary
You can
that
pay
is
yourself
far
a
below.
salary.
So I have a salary that is, I think it's 60 grand. I'm not sure what it is, but then your Medicare, Medicaid, Social Security, all that company matching that you would pay taxes separately are based on that salary versus an income that is far greater than that.
That's 100% true. And I've heard people pay themselves once a year. At the end, they meet with their tax advisor accountant. They write themselves a check for whatever amount it is for the tax benefits. I hear people set themselves on payroll and they pay themselves every 2 weeks. You can also set it up to where you're paying your child a salary. I think the max for that is $12,000 a year. So there's additional tax benefits.
If you have kids, let's just talk about this for a quick minute because I love it. If you have kids are what, 18 or less? Something like that.
I think it's 16.
16. All right. 16 or less. If you have kids 16 or younger, you can put them to work for you. I think it's $6,500 is what they can earn. I don't know. Maybe I'm wrong, but they can earn some amount of money. You can pay them some amount of money.
Tax-free.
Yes.
Tax-free. And I think it's the max amount of tax that they pay. So I don't know what the first level of our tax bracket
I think
is.
it's closer to 12. Shana's right.
It could be something like that. Yeah. It's the lowest tax bracket, whatever that is. Fortunately, I haven't had to worry about that one for a while. But you can max them out. You can put them in your pictures, take them to a house and have them walk around and be a model for, your social media.
Mm-hmm.
You do that on the regular. You can pay them $12,000.
And you don't have to pay them. You can pay them and put it into a college fund.
Yeah, or
Yes.
put
Kids
it
might
in
not
an
even know they're getting
IRA
paid.
or a ETF or whatever.
Yes.
And you do that every year. Say you start out at one day or whatever, and you walk around with this newborn out of the hospital or whatever. You just start them even right then.
Yeah, you do it with well, if you have 3 kids and it's 12 grand, that's 36 grand that you're not paying taxes on because you're paying your kids and you're actually putting it into a college fund.
Yeah, think about it. And if you do that for 16 years, the first 16 years of their lives, by the time they're 50, they'll all be millionaires and they don't have to put another dime in it the rest of their lives. Nobody told my parents about that.
Me
John,
either.
if you can't set it may be the cash flow you need, that is set it aside into an account, and that's what you buy their groceries, their clothes, their school supplies, everything through that,
Yeah.
so
Mhm.
that the kids having to pay for themselves.
Yeah.
Yeah.
So all great, super great even. But let's go back because I think this group is more about just getting started. So first thing you want to do, correct me if I'm wrong. Somebody tell me I'm an idiot because it won't be a hard argument. First thing you want to do is create an LLC or S Corp or some sort of legal entity. First thing you want to do. It's going to be some tax benefits, going to be some legal benefits, going to be minimum amount of benefit for hardly any money at all. Right? Is that fair to say?
Yeah.
Yep. So figure out how to do that. Next thing you're going to want to do is create a budget for your year. And we're still early enough in the year where you can get this without being too far off. Right?
Correct.
So Shana, let's talk about a budget. This is, how do you do a budget in your view?
So replace the word budget with projection. What are your projections? You need to know, first off, you need to know how much you need to survive in your personal life. And then you need to know how much you need to survive in your business.
How are you going to know that?
You got to look at your expenses.
Okay.
As John would call it, pull out your credit card statements
Yep.
and go through them.
Oh, let's talk about that real quick too. Sorry. Pause. Get a credit card in the company, LLC, S Corp, whatever name. True.
True.
And then put all your business expenses on that card. Right? It makes it a lot easier to track. And don't go buy personal stuff with that card. And don't buy business stuff with your personal card. That's called what?
Commingling your
That's
funds.
called disaster. Some people call it commingling. I call it disaster.
I like John's term.
Right? So you're going to have two cards. Are they cards or debit cards? Do you know the difference between debit and credit cards? Let's talk about that for a minute. Credit card is credit where they don't take it out of your money, where a debit card, I think, takes it out at the time. Credit card takes it out and you make a payment. And if you're smart, you make a complete payment at the end of the month, not partial. Is that fair?
Mm-hmm.
But then what you're doing is you're establishing credit. Good. You're building miles or whatever benefit you get from that, right?
Yes.
And you're keeping your business separate, and you can prove stuff from a liability standpoint. Is there any
Correct.
others that you do?
It helps you with fraudulent activities.
Fraudulent activities.
So if you
Boom.
have a debit card, it's harder to get that money taken care of and get it back. Whereas
Yep.
if you have a credit card, you're a little bit more protected.
Yep.
Depending on the credit card and the company you choose to do a credit card with.
So
and you
y'all,
shouldn't
let's
use
just
a
go to the
debit card
basics.
to Purchase.
LLC, S Corp, some sort of entity not named you personally. Get a credit card, get a checking account, right?
Mm-hmm.
All that. Super easy. Sounds bigger than it is. Not hard. Super easy. Get all that in place. Once you have that in place, attach your rent to it, attach your gas, attach anything that costs you money for your business to it. You can even auto pay it. That's what I do. If you don't. But, and then at the end of a month, you're going to have a list of people you pay on a recurring basis for sure.
Mm-hmm.
And then you'll have a list of what did we call this the last time we talked about this? The variable
Expenses.
costs, expenses, not fixed costs, but expenses, right?
Or variables, right?
Or variable.
fluctuating,
They
yeah.
change based on usage, right?
Mhm.
So after a month or a quarter or a year, you'll have a pretty good idea, because we're all creatures of habit when we break this thing down to the most part. You'll have an 80% ironed out of what you spend your money on. And that will be, is that called something, a list of expenses or accounts?
Accounts. Well, it depends on if you're looking at an income statement. If you're looking at an income statement or even a budget, you'll list out those expenses and your income and show where it's coming from, like we talked about last time.
Yep. And then go get QuickBooks. That might be number 3, because then it's all there for you. And then when she says, then you got to project. Okay, good. Let me go to my little QuickBooks thing or my chart of accounts that I'm spending my money on every month. And I can project, okay, I know what my rent's going to be. So after 12 months, we know how much rent's going to be, right? Is that your
Right.
projection on cost for that expense?
Yeah.
Okay. We can start to get a pretty good idea of what my gas is going to be, because last month's this and every month's pretty similar. Or, there might be some but you get a pretty good idea to budget. Is that
Mhm.
true?
Yep.
Food, entertainment.
Well, if you're just starting out, you're probably not worried about food or entertainment.
Right. But you can get a sense for that. I go to Chipotle 5 times a week. So all right.
Not recommended.
Right. But you start to see your patterns. You can start to project. Then you can say, all right, I'm new. How much am I going to earn? Right.
Yep.
I'm going to earn 50 grand, 20 grand, 100 grand.
Well, what do you need to earn? There's no estimate there. Like, you have to survive. If you have no other income other than real estate, what do you need to earn to make it by in your personal life? And then what do you need not only to make it by in your personal life, but to have a business worth owning? So that way you can have a life worth living. What is that number? I mean, you just have to know your numbers.
Know your
What does
number.
it cost for you to live? That's what you need to make in real estate. And everything else after that is propelling your investments. It's propelling your business, what you can put back into your business so that way your business can grow. Because they all know if you're not growing, then you're dying.
So create your budget, right? First,
Budget and
I would say
projection.
first one has got to be rent or mortgage, right? Because you got to live somewhere. Julie's told us many times, you got to have shelter, right?
Your basic human needs, yes.
You got rent or mortgage. You got to have some sort of a food allocation in there because you got to eat, right?
Principal, interest, taxes, insurance, HOA, and utilities. So
Yes, if
just
you're
think
owning a
of that,
property.
your
If you're owning a
PITI, if
property.
you have an HOA, and your utilities to run that,
Yep.
gas,
You're
electric, water.
You're probably going to need an automobile. Let's start with your living, right? You're going to need rent, shelter, food. You're going to need an auto because you got to drive around. You're going to have utilities because you got to be warm, right? Here's where people start getting a little dicey. You need insurance. The people get off on this. Well, I don't need health insurance, really. Maybe. You need car insurance, right?
Yes.
Maybe you need homeowners insurance that's built into your mortgage. You need renters insurance, right? I don't know.
Renters
It's easy
insurance
to
is
say when you got
cheap.
a lot of money, but when you're starting to count pennies, all of a sudden this matters.
Yeah, and if you are renting, renter's insurance for contents is so inexpensive. It's a smart thing to have.
It's a smart thing to have from somebody who's rented a lot because it's not really expensive, but it's really helpful when you need it. So car insurance, easy. So that's about it. Oh, healthcare, childcare.
Cell phone bill.
Cell phone.
I'm gonna
And
put
internet.
cell phone bill in a different. I'm gonna put that in a different group. Childcare. You got to have childcare if you have a child, right?
Talk to your accountant to find out if childcare is covered as a business expense or a personal expense.
Yeah, I'm just talking living expense right now. You get those things covered. That'll tell you how much you need to live. Every week I have to fill out a form with my coaching call and it says, how much do you need to live? Right. And that tells me how much I need to earn. How much does your business need to earn to stay open? I got to fill that out every week without fail. All right. So I'm pretty on top of that. And it tells me every week if I'm making money or losing money every week. So if you're not doing that, great, but if you should be. So that's your personal stuff. Then you go through your business stuff, right? This is where your phone will probably come in because that'll come into a business thing. You could probably argue the car, maybe, but you need a phone. All right. Maybe you need an office. You probably need MLS fees or whatever that stuff is. Okay. You can't not have it. You're going to be kicked out. Right. You don't need an office. You can work from home. You probably have to have a phone. I'd argue you have to have a computer. You probably have to have some sort of software. Is software free these days? I think I pay for everything, but I think you got to pay for some.
There's some free software through
You can
title
probably use,
companies.
even Google. You probably, as an individual, you can get away. You probably don't need software, but
You need internet.
you need internet. You got to have internet. But if you have a cell phone, you might have internet built into your thing, right? You can work your phone, right? So that's how you figure out your business costs. If you're running a real estate outfit yourself, your business cost is pretty cheap, really.
It should be. It shouldn't
It's
be.
very cheap, right? Yeah. So create that. And that'll tell you how much it costs you to live personally and feed your family personally. Then you have a separate group that's for your business. And that'll tell you if you have a business worth having, like you said, right? Owning, business worth owning, right? Oh, I have a great business. Really? How much money you make? Zero. Oh, it sounds awesome, right?
I have
But
lots
worked
of
really
tax
hard at it.
deductions.
Yeah, use your tax funds. So that's what you do, you guys. And it's not that hard. I mean, you can do it in 10 minutes. Just go through and mentally. Now you're going to forget some stuff. So go to your account, right? Your checking statement, or you don't use checks so much anymore. Your bank or your credit card statement. And it'll tell you. And then you start looking at that, right? Because then I'll tell you, okay, I got to make X dollars per month.
I would suggest rather than trying to figure out what your expenses are, take your bank statements and your credit card statements. You can download everything that I have. You can download it to, if you don't have QuickBooks or some software, download to a CSV. That's one of your options. And then convert it to whether you use Excel or, Google Sheets. And then categorize, sort by the description of what you're spending the money on. And then categorize first that way to see where you're spending money And then you can decide you ABC the columns. This is non-negotiable. I have to pay the mortgage. I have to pay the utilities. These things are flexible. I don't have to go to Chipotle 5 days a week. And you can adjust for you can do personal, business, don't really need this, or, this is an occasional expense. I only have this every time I get a listing. But, one of the things that Shana said is you need to have 3 business accounts. I would say you need to have 3 business accounts and a personal account. So you need to have at least 4 bank accounts for your, if you're in business. I have never had the separate reserve. I'm guilty of that, but I just separate that out on a spreadsheet. And then I use a payroll service to pay the taxes on a what is it? Biweekly for yourself, and if you have employees, and quarterly for your, all the other stuff.
Shana, we hijacked your call or your
Sorry.
conversation.
No, this is great. This is your call. I'm a guest.
You got anything to add? It's gone fast. I mean, we're already coming up.
Cut your personal expenses before you start digging into your business.
Right.
Mr. Jeff and I used to say, or and Aaron, cut the potatoes, cut the sides before you cut the main course.
Ooh, we like that. Jeff, you got something to add? You look like you're going to say something.
First thing people do is get rid of their office space, and then they get rid of their coach and all the things that motivate you to keep moving. And then they do what we talked about maybe yesterday, I can't remember, was they stay home and think things are going to change, or they're going to wait for them to change. Don't do that if you can possibly help it.
I'm going to tell you guys this from my personal experience, because I've effed up all this, believe me. Matter of fact, I'm still un-effing it. Here's the thing. It's liberating. I'm the guy who won't open my mail. It's like, oh God, that's a bill. Let's put this to the side. We'll look at that later. And later never shows up, right? Oh, yeah, these guys, whatever. I put it off, right? I auto pay it. Don't pay attention until I have to go meet with my accountant and they say, what's this? I'm like, I don't remember, right? But when you do this, it's incredibly liberating. It's free. It opens you up. It's the exact opposite of what you think. Like, I don't want to look at it. I don't have enough money. I don't have this, or what is, I don't know how. It's super easy and it's incredibly liberating once you get it. And I can tell you, it's really changed the way I look at things. You start getting strategic as opposed to defensive. Totally different game.
It lifts a weight off, because
does.
if you know what your numbers are, and you have, the personal account where you're like, I know I need this much every month and it's not that bad. And you have everything auto pay here, there, everywhere. And I need X, and you're auto funding it all. You don't have to every day be afraid when the mail comes in to not open that bill, or, just, it's all on auto, and it frees you up to have a lot more energy to focus on building your business, rather than, like John said, being defensive.
Mm-hmm.
Very cool. All right, guys, any questions?
No.
If you're afraid to get started, I'm happy to help.
There you go. Use it. Use it. I promise. She's so smart. She's helped me. And sometimes, here's the other thing I'll tell you. We're finding this out when we're hiring people. It's so much easier when you have a partner, somebody to talk to, bounce things off and whatnot. And so if you're struggling, she wants to help. She's offering to help. She knows how to help. Take her help. Take her help. All right. And leave your ego at home when you do it. Okay. She doesn't care you don't care how much somebody's making or what their expenses are, right?
Nope.
Extremely helpful to have somebody, a disinterested third party, that can give you an honest interpretation of what the hell you're doing. Right. Huge benefit that she just said, I'm happy to help. That is that's priceless. Take advantage, make it priceless. Right? There you go. Next week, we're going to talk about what we're going to talk about this week. Okay. Promise. You okay with that?
I'm good with it.
All right. Thanks, guys. That went fast. Bye-bye.
That did go.
Sorry, Shannon. That went